Happy new financial year. And you know what that means? It's tax time. So you'll start getting ready to lodge your income tax return for FY24. And you're wondering what you can claim as a deduction. Well, in order for us to determine what you can claim, let's revisit and understand what a deduction is. So, looking at the Income Tax Assessment Act of 1997, Section 8-1 states that you can deduct from your assessable income any loss or outgoing to the extent that it is incurred in gaining or producing your assessable income, or it is necessarily incurred in carrying on a business for the purpose of gaining or producing your assessable income. So that was a bit wordy, but we can break it down in its individual components. So the first one is that it needs to be necessary and ordinary for that business or work activity that you are performing. It needs to make sense. So perhaps you are a technician or a plumber and you need to go and visit your different clients at different sites. Then it makes sense that you will claim travel and motor vehicle deductions. If you are a professional like an accountant and you need to maintain certain licenses, then it makes sense that that is incurred for your income that you are going to pay in that tax year. Which moves on to the second point, is that it needs to be incurred while earning that income. The expense must relate to that income. So, say as an accountant, my expenses need to relate to being an accountant. And one area where I think people tend to get this wrong is education expenses. So, as an accountant, if I wanted to take more education, more tuition fees, training fees, then of course I can claim that as a deduction. But perhaps I wanted to do a management course or a sales course. It's not really related to my role as an accountant. So I couldn't really justify me claiming that as a deduction, even though potentially I might move to maybe a sales director role or a management role or so on and so forth. There needs to be a clear distinction between that expense and the income that you are paying tax on in that financial year. So, with that said, if I was planning to, say, go into a sales director role, I would move into that role first and then enroll into that course. And therefore, there's that clear distinction between that expense in that financial year and that income in that financial year. And the last point is that you just make sure that it is well documented. Of course, we need to help substantiate these expenses and make sure you keep your records up to 5 years after you lodge your tax return. But of course, if you are unsure, you can always talk to your tax accountant. If you would like to work with FTC this year, please reach out. We'd love to help.